Let me ask you something. If you could 10x your money in the next few years, but there was a real chance you could lose it all, would you take that bet? That's the world of speculative stocks. These are the wild card, like Palantir, Rivian, Plug Power. The ones sitting right on the edge between genius and disaster. So they attract dreamers, gamblers, and sometimes the smartest investor in the room. Maybe you are one of them. Today I'm breaking down exactly what speculative stocks are, how to analyze them without losing your mind, and most importantly, how to protect yourself in this high risk, high reward corner of the market. Before we dive into the names, let's set the foundation first. Because if you stay until the end, you will understand not just what speculative investing is, but how to play it intelligently. Understanding speculative stocks are bet on the future, not the present. They are not valued by current profit because most of them don't have any. They are valued on what they might become in future. Companies like Palantir, Rivian, or Plug Power aren't competing on today's number. They are competing on tomorrow's potential. These are the businesses trying to rewrite industry. Data analytics, EVs, clean energy, all massive ideas but with uncertain execution. And that's the key difference. When you invest in speculative stocks, you are not buying uncertainty, you are buying possibility. And that possibilities come with volatility. So speculative stocks often move 20% in a week, sometimes in a day, not because the fundamentals change, but because investor confidence did. So to survive in this game, you need more than optimism. You need strategy. So what's the psychology of speculation? Speculative investing isn't just about numbers. It's about psychology. When markets are euphoric, everyone thinks they have found the next Tesla. When fear hits, those same investors run for the exit. The emotional swing is what kills most portfolios. The best investor treats speculative plays like experiments. Small calculated position inside a larger diversified strategy. They don't chase every new ticker. They wait, observe, and scale only when the story starts proving itself. So if you want to play in this zone, ask yourself, am I investing or am I gambling? Because that one question changes everything here. So let's start with Palantir. This company sits right at the intersection of AI, defense, and big data. They help governments and corporations make sense of massive datasets, detecting patterns, predicting behavior, and finding insight faster than human ever could. That's not science fiction, that's their real business. What makes Palantir speculative is its business model evolution. For years, it relied on government contracts, slow, steady, but limited. Now it's aggressively expanding into the private sector, hospitals, logistics, manufacturing, energy. And that's where the exponential growth could come from. What about the risk? Valuation. Palantir trades at a rich multiple pricing in years of perfect execution. Any slowdown in adoption or spending cuts could hit the stock hard. But here is the truth. Palantir doesn't need to be perfect. It just needs to prove that AI data integration isn't hype. It's infrastructure. If they do that, this company could quietly become the Intel of information. Next up, we have Rivian. Rivian, one of those companies that feels like a dream play. Sleek electric trucks, a visionary CEO, strong early spots from Amazon and Ford. But it's also a textbook example of how hard it is to scale hardware. Building EVs isn't the same as building software. You need factories, suppliers, batteries, and precision logistics. And every small hiccup hits margin brutally. That's why Rivian is speculative, because it's a bet that the company can not only build great vehicles, but build them profitably. So the story here isn't just EVs growth. It is about, can Rivian survive long enough to see it? The company is still burning cash, but their product quality, design, and brand perception are surprisingly strong. And if Rivian can hold production targets steady while trimming costs, that's the path from speculation to sustainability. The lesson from Rivian is this here. Investing isn't about spotting the point where potential becomes execution, because that's when exponential returns to begin. And then there is Plug Power. This is pure speculative energy. Literally, Plug Power entire business is built around hydrogen fuel cell. Clean, efficient, and potentially game-changing. If the world transitions fast enough, they've been around for decades, and every few years they become the face of the next green revolution. But here is the honest truth. They are still not consistently profitable. The technology works, but scaling hydrogen infrastructure is expensive and slow. Government needs to subsidize adoption, and that dependency adds uncertainty. But that's the paradox of speculative investing. The same uncertainty that scares most people away is exactly what creates opportunity for the few who understand it. If the global clean energy pushes accelerates, Plug Power could go from niche to necessity. But if it stalls, this stock could keep bleeding for years. So your edge here isn't prediction, it's about risk control. Now let's get some practical. How do you actually play speculative stocks safely? Here is the framework I use. Number 1, position size small. Limit speculative plays to 5 to 10% of your portfolio, like total portfolio. They are meant to add upside, not dominate your strategy. Number 2, look for asymmetric risk. You want a situation where your upside potential is much larger than your downside loss. Number 3, steady cash flow and burn rate. Speculative companies survive on time. The longer their runway, the higher their odds. Number 4, focus on catalyst, new contracts, partnership, regulatory change. These drive sentiments more than fundamentals in early stages. And number 5, the last one is take profit. If a stock doubles, trim. If it's triple, de-risk. Greed kills more portfolios than losses ever will. Speculative investing isn't about all or nothing. It's about surviving long enough to catch a few bets that actually work. So yeah, speculative stocks are the wild side of investing. They are volatile, unpredictable, and often emotional. But they are also where innovation lives. Companies like Palantir, Rivian, and Plug Power remind us that the biggest ideas always start as speculation until one day they are not. So the difference between winning and losing here isn't about luck, it's about preparation. So if you are going to play in this gambler zone, do it like an investor with data, discipline, and a clear plan to protect your capital. Because when it's done right, one well-timed speculative play can change your entire financial trajectory. But only if you are still standing when it happens. If you found this breakdown valuable, hit the like button and subscribe. And it really helps support this channel, and share this with someone who's tired of guessing and wants to learn how to think like a strategist. Thanks for watching, and in the final episode of this series, we will cover how to combine all 6 stocks types into one balanced future portfolio.